fine all this time. I was inside out. Put my heart in your hands till it came back round. Didn't think that you'd fallen so deep. Didn't know that I had it in me. Guess my sanity breaks away too easy. Bring it to a heart, back down. Bring it to a heart, you're back and it's all your fault. Back down. Bring it to a heart, you're back and it's all. All right, what is up, guys? John Fibonacci here. Welcome to my YouTube channel. All right, I know it's been some time since I recorded and put out a trading video. I know it's been like maybe a month now. I recently put out a Instagram design training, a little bit for those of you who want to maybe clean up your Instagram, maybe get some more followers, engagement, and stuff like that. And speaking of Instagram, make sure you guys are following me at John Fibonacci. All right, if I'm not following you back, just hit me up, DM me, and I'll follow you back. Not an issue there. All right. So, with today, all right, I want to continue what I initially started about a month ago for the relative strength analysis. So, this is a concept that it's going to take a bit of time and a lot of practice to really understand. Okay, this is also something that I taught in the book Advanced Technical Analysis, a guide to high probability trading, or trading, excuse me, by aligning with smart money. All right, I look at correlations, okay, and use them in a certain manner. So when it comes to the cross pairs, I usually don't outright trade the cross pairs. You can, there's methods for that and things like that, but I predominantly look at the majors, okay, and I use the cross pairs to kind of confirm, certain analysis and what have you. So I really use cross pairs to determine what's going to be strong and what's going to be weak. Okay. Now, we've done the whole correlation divergence, right? I showed you that in the initial video, right? I think it was AUD USD and NZD USD, right? We compared those two line charts together. Okay. You can also do that with Euro USD and GBP USD, but to take things a little bit further, okay, the cross pair can help confirm what it is that you're potentially seeing in the market. Okay, now one of the mistakes that people make when it comes to relative strength analysis, and I think with pretty much any other concept that people learn, wherever they may learn it from, is that they go in and they tend to overdo it. Okay, they tend to look for that one specific topic in every single bit of price action, and I'm gonna tell you that's not how it works. Okay, you have to basically, if it's not obvious, don't trade it. You know what I mean? Like, you can't force the market. So if it's not like clear to you, then I wouldn't really touch it. Okay, so with that being said, I'll go ahead and get right into the trade. So, the reason for this specific video, if you were paying attention to my community tab, I put out a chart the other day. All right, this was basically a screenshot of my MT4 for GBP USD. I was about 6 pips off from the high of the day, essentially, and then caught about 66 pips to the downside. Not really near the low of the day, but it is what it is. But a decent move nonetheless. Okay, so very easy 1 to 3 risk reward here. Okay, it could have been higher than that in terms of risk reward, but I wasn't trying to have too tight of a stop loss. Okay, just in case I was wrong. I had to give the market a little bit of breathing room. Okay, but anyways, so I want to explain why it is, that I took GBP USD over Euro USD. Okay, so cable, GBP, fiber, Euro. All right, so
Starting off with Euro GBP, when I was looking at this cross pair prior to London and like right at London Open, I did anticipate higher Euro GBP. Okay, and that just has to deal with some of the highs over here, price action in this area. Plus, we met some other lows down in here. So, when price makes a lower low, sometimes, you'll see, up movement. All right. So basically, if I think the cross pair Euro GBP will go higher, then to me, in my mind, to me, that means Euro is stronger than GBP. Okay, so Euro is stronger than British Pound. So now, what you do with that information, okay, it's not just outright, okay, let's buy Euro. That's not how it works. If the foreign currencies are most likely bearish, okay, meaning you most likely have a bullish dollar index, then what you would look to do, what I look to do, is if foreign currencies are going to go lower, then it would be a good idea to short the most potential bearish currency, right? Because we all know that currencies don't move in the same number of pips or percentage, right? So, for example, if you look at the right side of the screen, I'll put a highlight in here, but you can see that as of Friday's data, okay, GBP USD was down 0.3% on the day, and Euro was up 0.03%, rather flat, to be honest with you. But you can see that even in that data, British pound was weaker than the Euro USD, and so right, you can even see it here, right? If the euro is stronger than British pound, then the cross pair Euro GBP should go higher. And we do see that here. Okay, so that's how I use it. So if I've got directional bias on a cross pair, then I use that information to find strength or weakness. So for whatever reason the dollar index is bullish, then I want to short a bearish currency. Okay, so we'll take Euro GBP off now, and we'll look at British pound. Okay, now what I showed you guys over in here was a 5-minute, I think. All right, what I showed you guys, I believe, was a 5-minute, or it might have been a 15. Okay. Either way it goes, this was the move. Okay, so I entered right at 39.80. Okay, so right about there. Actually, we'll extend that out because price actually did come back to my entry again before initially trading lower. So we basically see price trade lower, right? We start to consolidate, and then price jumps all of a sudden, and then as price was trading higher, tagged my limit order for the short, went a couple of pips against me, and then we started to trade lower, and by that time I was already asleep to begin with. Okay, so this action here I wasn't awake for. The initial run to my take profit at 139.14. I normally don't use like levels that like that. Usually it'll be like 39.10 or 39.20, but I wanted to squeeze a couple more pips out just to cover spread and stuff like that. So 39.14 ended up being the exit, and so price did run there, which is cool, and I'm thankful for that while I was sleeping. But essentially, that was the reason why I would short British pound over euro, right? So if we go back to this area here for the euro, okay, we can overlap that, and we'll actually, let's flatten this and flatten this. Okay, so when you look at the short, okay, that same time, if I was shorting the euro here, okay, then, I would have taken some drawdown, and then price eventually came down past that potential entry, but not by a whole lot, and then price kind of just trades sideways. So there wasn't really a lot offered there unless you had waited until New York to short up in that area. But by that time, okay, up in this area, the number of pips, at least to me, and even in terms of risk reward, I don't think was as good to the downside here as much as British pound was. Okay, so I hope that makes sense. Where you're looking at majors, looking at crosses as well, and kind of confirming what's going to be strong and weak, and hopefully, if it's a buying opportunity, to buy strength, or if it's a shorting opportunity, to short weakness, and that's really about it. So, you can go back into the older videos on this channel. You can look at fib logic, things like that. It's all there. That was also a part of the trade as well. I know that series is over, but I guess we'll just throw that up here real quick, just in case some of y'all are wondering. High down to the low. Okay, we see that price pretty much trades right into that 618 area, which was also very, very close to the entry, 39.80. Okay, so just because that series is over, I still trade that way. Okay, so using the fib logic, in addition to other things, that was part of it, for potential high probability trade. Okay, I think I can't remember. I think that was the only trade I took this week. Oh, no, sorry. I did take a break even on euro earlier in the week. And that's kind of why I was looking for a trade on Thursday. I usually don't trade on Thursdays very often. But when I do, it's usually because I messed up earlier in the week. So I ended up shorting euro. I don't remember where it was at. I think it was in here. I think I shorted this. It was right here. What I ended up doing was shorting that up move there, and then price ran lower, and then I aggressively had moved my stop, and then price came up to knock me out. So took a break even there, and really didn't do anything for the rest of the week. So I was continuing to look for opportunities, and luckily British pound did set something up. Okay, so if we weren't in those conditions, then I probably would have just took that one break-even trade for the week and then just left it at that. But luckily British pound had set up so late in the week, actually. So very thankful for that. But yeah, that's pretty much all that I got for you guys today. I hope you learned something. All right. Please like, subscribe, so that way you don't miss future content, and I will see you in the next video.
Back down, get to a heart, and it's all your fault.